Today is July 2nd, 2010. This is Nicholas Salisbury, and here's my outlook for the Euro US dollar. Okay, for those of you that do not know, the banks in the Eurozone have recently reported the amount of aid that they received from the ECB, and these numbers were much lower than the analysts have expected. So this has acted as a catalyst to restore some confidence back in the Eurozone. We've seen a huge asset reallocation and also a short covering rally in the Euro USD. And at this point, I think we're back on our way up to $1.30. As you can see, we've clearly broken above the neckline of our inverted head and shoulders pattern, with the neckline being at about $1.2450. We also got the jobs data out this morning of negative 125,000 jobs, and that wasn't enough to bring the Euro US dollar down. In fact, the Euro USD actually rallied on the announcement. Additionally, we have the USD, which is not benefiting very much at all from the safe haven flows, with this huge asset reallocation going on. And whether the equity markets have been going up or have been going down, we've seen a weaker dollar lately. So roughly the head on this pattern is at about $1.19, and we have the neckline at about $1.2450. If we take that distance, which is about 550 pips, and we project it up from the breakout of the neckline at about $1.2450, we have a target here at about $1.30. So if you're not long already the Euro USD, I think this is a great opportunity to go long with your stop loss possibly below the neckline and your new target here at about $1.30. And we might drift all the way up to the bottom of this consolidation here that happened back in May at about $1.32. Today is July 2nd, 2010. This is Nicholas Salisbury, and here's my outlook for the Euro US dollar. For those of you that do not know, the banks in the Eurozone have recently reported the amount of aid that they received from the ECB. These numbers were much lower than the analysts have expected, and this has acted as a catalyst to restore some confidence in the euro currency. And from this, we've seen a huge asset reallocation and a short covering rally in the euro. Now at this point, I think that we're going long to about $1.30. As you can see here, we've clearly broken the inverted head and shoulders pattern on the Euro US dollar. And also the jobs data that we got out today was basically priced into the market. In fact, we saw a rise in the Euro US dollar after the announcement occurred. Additionally, the USD is not benefiting from its safe haven flows with this huge asset reallocation caused by the lending data received. Whether the equity markets have gone up or gone down lately, we've seen these flows have contributed to a weaker dollar. Now the head on this pattern is roughly at about $1.19, and we have our neckline roughly at about $1.2450. If we project the distance from the head to the neckline, we have about 550 pips. We arrive exactly at about $1.30, which is right around the target area, which is the bottom of the consolidation that occurred here in May. So at this point, I would be looking to get long the Euro US dollar if you're not long already. And $1.2450, the neckline should serve as some decent support for you. So if you were to go long today, you would have about a 150 pip stop loss, and you would be going for 400 pips.